Let's go to CommSec. Stephen Daghlian joins us for a look at the markets, which open up just over an hour's time. Stephen, how bad is it going to be for our investors today?
Very good morning to you, Peter. Well, look, it's not going to be great, I think. SPI futures at the moment, at least, are pointing to a drop of around 1.25%, and that's a fall of 82 points for our market. This is after the US share market fell by about 1.7% on Friday. So it means that in the past 2 weeks, the S&P 500 in America has fallen by about 10%. And our market, with just 5 trading days left in September, is down 6% this month. So one of the important things to watch, I think, in coming days will be whether or not we're going to get to the June lows. Because at the moment, if we do have that 1.25% fall today, it would leave us just 1.3% above the June low. The US market's only 1.5% above that level. So it's a bit of a psychological barrier, if you will. It could either produce a bit of buying support around that level, but if we do see a fall below that point, that could certainly be a negative for markets. Quite a bit to watch this week. Not really much today to move the needle, but we do have about $11 billion being paid out in dividends to shareholders here in Australia. Most of that will be from CBA and Fortescue, also Woolies and Coles, but there'll be 13 other companies paying out at least $100 million in dividends. At the centre of course, some of the declines here has been inflation going through the roof around the world. So later this week, we get updates on inflation in Europe and the US, and a new monthly report on inflation will also get attention on Thursday. So not as extensive and expansive as the quarterly report, but it will get at least some attention, I think, later on this week, Pete.